Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. The Nifty and the Sensex trade higher, led by gains in oil marketing companies. The mid-cap index outperformed, shrugging off the gloom of the last 4 days.
The government is pumping 2,000 crore into Punjab National Bank, which has an interest payment coming up in less than 10 days from now. That's a Bloomberg exclusive.
Crude prices hit a 3-week low after Saudi Arabia reaches out to its Asian customers to sell more oil.
The government notifies higher tonnage for goods carriers in the country.
And higher ad spends may aid Zee's first quarter earnings.
But first, the markets. And Neeraj is here as always with a closer look of what stocks are moving today. Neeraj.
Yeah, good afternoon, guys. So crude and crude-related movements dominating trade, really. So BP, HP, IOC, naturally so, a knee-jerk reaction. The markets are okay. I mean, as you guys summed up in the headlines, large caps just about muted, mid caps and small caps doing well. And boy, we needed that. 3 days of carnage. We're probably having the mid caps and the small caps do well. This is the picture, really. And the Nifty Bank too doing reasonably okay because PSU banks too are participating. But it's all about what's happening to crude sensitives. So BP, HP, IOC and HPCL in particular, some big moves there. We had the management, by the way, and they mentioned that there is no big change to marketing margins that happens as a result of crude prices coming off because cracks haven't really gotten changed so much that they will have a big impact on marketing margins or inventories for that matter. But well, the market likes it. $68 is not something that we've been used to seeing. So maybe that's why these stocks are doing well. And as a result of this, even Aviation has done reasonably okay for itself. So if you see what Jet or a SpiceJet or an Interglobe Aviation are doing, they're doing reasonably okay for themselves, which is good going, really. Not too many big losers. Pharma is not really carrying on from where it left off yesterday. So you will see that Dr. Reddy's or Sun Pharma or Lupin, some very deep gashes yesterday. In today's session, Nifty Pharma has actually bounced back. And even the weaker ones are not really. So Dr. Reddy's, after 11% downtick yesterday, is just about 0.5% or thereabouts. Sun Pharma and Lupin don't even have that much. So Pharma is doing reasonably okay for itself in the session today, which is also helping matters. And speaking of banks, I mean, yes, a clutch of PSU banks, Canada, etc. have done well. But just one name that I want to mention, and it's risen to the highest point of the day, is Federal Bank. No big negatives, quite unlike what it did the last time around. And maybe as a result of that or otherwise, 12% on 32 million shares traded for Federal Bank. So good going for this one. Awaiting more details, management commentary as well later on. But yeah, no negatives is probably the only thing that we could gather 30 minutes into the numbers. Let's wait and watch if there's more in store for this one.
All right, Neeraj, thanks so much. The government has blinked. It will step in to help Punjab National Bank make good on a coupon payment on its perpetual bonds coming up later this month. Anto Anthony of Bloomberg News joining us with the exclusive details of that story. Anto, what do we know?
Oh, that's right, Ira. So government has said that they will be stepping in within 10 days to pump in some money into Punjab National Bank to boost its capital ratios. As you mentioned, the 81 bonds which they had sold last year, the coupon payment is coming on July 25th. It's only a 135 crore rupees worth of coupon payment, but because of the caveats in the prospectus, if the capital ratios are below a certain percentage level, they wouldn't be allowed to make that payment. And that threshold is around 7.35%, while the bank's CET1 ratio stands around 5.96%. So obviously, if government doesn't step in, then a deferral would have happened. This wouldn't be a default, it would be a deferral, but government is very clear that they don't want any coupon deferral on any state and bank AT1s. So they are stepping in, and we are expecting the announcement this week or early next.
All right, Anto.
Anto, thank you so much for that. Meanwhile, the board of IDBI Bank will be meeting in Mumbai today to approve an investment from LIC. Remember, that will be the third approval in place, leaving only the RBI's approval. On Monday, the LIC board had approved increasing its stake in IDBI Bank to 51%.
The government has notified new truck tonnage norms. According to the new rules, transport vehicles can carry a higher load. Darshan Mehta is standing by with the new weight caps on different kinds of vehicles and the implication for companies. Darshan.
Yeah, so basically this came in early morning, and clearly there seems to be a lot of traction in terms of what the government wants to do. So basically there are three categories in which the axle has been improved. First of all, in terms of the single axle, they have increased it from anywhere between between 3 tons to 11 tons. They have the tandem axle, and the third one is the tri-axle. Now, what does this mean? Clearly, now for the first thing is there's no clarity in terms of whether this will be applicable only to the new vehicles or it will be applicable to the old vehicles also, because that seems to be the bone of contention. On the new trucks, obviously there will be these norms that will be levied, but on the old trucks, that will include a lot of modification that will come in, and they will have to comply with the emission norms. So that's where clarity is not there. But overall, what a brokerage is saying, Nomura is saying that the demand will be hit if it's in case of the existing vehicles, because that will mean that there will be refitting of the old vehicles and the demand will not come in the new vehicles. But if it's only implemented on the new vehicles, that is positive for the commercial vehicle companies. Even Bank of America Merrill Lynch says that it will be a statewide impact, but nevertheless this means that it is positive if it's only on the new trucks that will coming in. The companies that will benefit clearly will be the automakers, Tata Motors, and as well as Ashok Leyland. Eicher also benefits because they have a little bit of commercial vehicles that come in, and what benefit again will be the secondary or the ancillary units, like the financing companies, your logistics company. But overall, there needs to be more clarity that will come in terms of whether this is only for the new vehicles or the existing vehicles also.
Darshan, thank you for that. News on your screen. Numbers from Ashok Leyland flashing 370 crore is the top line, is the bottom line, on an estimate of about 350 crore. I think there is another income component as well in that. Yash is standing by with some more details on Ashok Leyland's numbers. That stock has reacted positively. A few headline numbers that I'll take you through. Revenues are up 6,250 crore, if I'm not wrong. There is another income component of 50 crore. Net profit as a result is up to 370 crore on an estimate of 350 crore. News on the screen at this point is that total cost is about 57.6. That takes their net profit at 370 crore. That, as I said, is higher than what the market was anticipating. Yash, do we have more?
Yeah, so their finance cost, that has gone down significantly as well if you look at the numbers. So that has come off from about 37 crores to about 11 or 12 crore rupees for the first quarter. But that apart, the numbers seem to be very good. They've come in above estimates. Just to run you through the top 4 numbers, their revenues that have grown by about 47% to 6,250 crores, while their net profit that has almost tripled to 370 crores versus 111 crores. Mind you, we had that low base effect in the first quarter of last year, and also there was this transition to BS4 norms, so that impacted sales, wherein the dealers had to sell or get rid of the inventory at a significant discount. So that seems to have had a bearing on their margins, and that has seen a significant improvement on a year-on-year basis, coming in at about 10.4% versus 7.2% in the same quarter last year.
All right, Yash, thanks so much for that quick take. We will certainly come back for more details. Let's move on. UPL may take a $3 billion loan to buy Arista Life Sciences. Sources tell Bloomberg News that UPL is in talks with banks to help fund the offer. PR Sanjay of Bloomberg News joins us here in the studio for more. PR Sanjay, what have you picked up?
So the deal is getting into the last final phase. So last time we discussed about a potential big acquisition of 4 billion. So now UPL is in the market to raise at least 3 billion to fund this deal. And Arista contributes at least 50% for PSP's revenues of 3.8. So it's a big chunk, and it's a very important deal for UPL. So UPL is in talks with at least 2 banks, including Mitsubishi and Rabo, for raising 3 billion, and they're seeking an 18-month bridge loan, which would seems to be fructifying. And there are other PE players are also taking a key role in that. One is ADIA, and there could be 1 or 2 players will also come into the SPV. But meanwhile, UPL is going ahead and get their share, which is 3 billion from the market, from banks, to fund Arista. Arista is very critical because it can enhance, it can get Arista, the UPL, into the next level, with Arista coming to the portfolio of UPL.
Do we know how much will ADIA contribute to this, and any timelines?
So there's an SPV being floated to fund, to buy Arista from PSP. But what we understand is ADIA will be the lead lead PE partner. There could be one financial investor. It could be a PE or it could be a silent just financial investor coming to the play. But the final, the deal has to be announced by August. That is what we are hearing. So before that, they will finalize the key members in this SPV. But this fundraising effort from UPL is a standalone effort from UPL, and we could see one or two players coming into the SPV to buy, Arista from PSP.
Sanjay, thank you so much for that. That's the story on UPL for you. India, meanwhile, has imposed a 25% safeguard duty on solar cells from China and Malaysia. This move is aimed at protecting local manufacturers. Anindya Upadhyay of Bloomberg News now joins us with more details. Anindya, what is the thinking within the government? The government was looking at a much steeper duties. Is it lesser than anticipated? What's the logic?
So Harsha, what was proposed in January this year for safeguard duty on solar cells and modules was 70%, and this is 25%. So definitely this is kind of lower than what was proposed and what people were expecting. However, the time period has been increased. So Chinese and Malaysian solar cells and module exports would have a safeguard duty of 25% in the first year, and then in the second year there'll be a 20% duty for the first 6 months and 15% for the second half of the year. So basically, the domestic manufacturers have 2 years of leeway, 2 years of runway to be able to scale up and compete with the Chinese manufacturers, the Chinese equipment. There's always been this concern, and even the recommendation by the Commerce Ministry, which I have, kind of says that it is in the safeguard duty is in public interest to protect the domestic industry from injury, and as well as to kind of see to it that solar power costs are also low. However, the challenge is that many people are pointing out to is, will 2 years be enough for India and for Indian manufacturers to make cost competitive products? Will they be able to match in these 2 years the cost of cheap Chinese products? Also, will they be able to scale up enough? So that's the opportunity, or that's the challenge that Indian domestic manufacturers now have to deal with or rise up to. If they can scale up in a very big way, so right now it's just 2 to 3 gigawatts of manufacturing capacity that India has, and which is really very less if you compare with what the government intends to tender this financial year and the next, which is of the order of 30 gigawatts every year. And so basically what we domestically produce is only 10%. And can we scale that 10% to a more substantial amount? And so experts have pointed out that this whole safeguard duty on solar cells and modules would be more justified if there would be more manufacturing tenders, and if India can actually use these 2 years and scale up, and also match costs with cheaper Chinese products by cheap financing or infrastructure and things like that.
Sure.
Otherwise, it may be a little bit difficult to justify this. Also, a lot of solar developers who were complaining that the safeguard duty is going to push up cost of solar power,
right,
are also are probably saying that it's a comfortable position because of Chinese policy shift, which is going to cause a glut of Chinese equipment. So the safeguard duty increase may balance out the fall of equipment prices globally. Back to you.
Anindya, many thanks indeed for joining us with those details.
All right, crude prices sank overnight on indications that Saudi Arabia and the US are ready to supply more oil. Sources told Bloomberg News that Saudi Arabia is offering more crude to some of its buyers in Asia. Meanwhile, the US is considering a move to use its emergency oil supplies to bring down the fuel prices. But this may not immediately translate into a fuel price cut in India. HPCL chairman M.K. Surana told Bloomberg Quint that the refiners will try and protect their margins before actually adjusting prices. Listen in.
The marketing margin is not a function of purely the crude prices. It is a function of the international product prices.
Okay.
And so there is an element of cracks also in that. It is not only the crude prices and the timing of movement of product prices vis-a-vis crude prices. Second part is that oil companies do not just make huge profit if the prices are down, or a less profit if the price is very high. there is a margin level which we try to protect, and accordingly the market price is adjusted to the international product prices. The only thing is that if the prices are lower side, there is no pressure or no concern in the market that whether we will be able to pass on the full impact of the prices or not.
That's the management of HPCL. Meanwhile, aviation stocks have taken a beating this year. Jet Airways leading the declines. In fact, Jet has slumped over 60% this year. Indigo is relatively resilient. What's causing this turbulence? Samit Sarkar is here with some analysis of the aviation stocks. Samit.
So there are multiple reasons for that. Now, if you see the prices of aviation turbine fuel, that is the ATF. Now, year to date, they have been on a higher trend. Now, ATF nearly accounts for 35 to 40% of the total cost for an aviation company. And if you see the prices here, in January 2018, the prices were higher by around 9.4% compared to last year. April 2018, the prices increased by 19% compared to last year, followed by a rise of 25%, then a 39%. And in July 2018, the prices were higher by around 43%. Now, though crude prices have come off a bit from their highs, but the prices are still higher compared to last year, and this will definitely impact the cost structure of an airline company going forward. Now, secondly, if you see, most of the expenses for an aviation company is dollar denominated. Now, costs like fuel costs, lease costs, spare parts and other costs are the expenses that the company needs to pay in US dollars, and weaker rupee means that the company needs to shell out more, which will again impact the performance of these aviation companies. Now, year to date, for the financial year 2019 so far, if you see, the rupee has depreciated by 5.6% in financial year 2019, which means that the aviation company needs to pay out more, and that's the reason their performance, operational performance, will see an impact of this. Also, third factor that has been impacting the aviation companies is the lower ticket prices. Now, reports are suggesting that in the first quarter, which is a seasonally strong quarter for an aviation company, ticket prices were weak, which is a bad news for the airline companies, because the second quarter, that is the current quarter which is going on, the prices are expected to be weak because this is not a strong quarter. So, in short, the first quarter was weak, the second quarter is expected to be weak, which means that this will be the third consecutive quarter. That is the second quarter of financial year 2019 could be the third consecutive quarter of weak ticket pricing, because the fourth quarter of financial year 2018 also saw weak ticket prices. So the sentiments for the aviation companies are now weak because of no pricing support and because of higher expenses.
That's for the sector as a whole, isn't it? Why has Jet then fallen so sharply?
Now, if you see for Jet, now lower airfares and higher expenses impact the company the most because of its high cost structure compared to other low cost carriers, that is Indigo and SpiceJet. Now, on an average, if you see, Jet Airways cost per available seat kilometer has been in the range of 4.1 to 4.8 per seat kilometer. That is around 32 to 47% higher when compared to Indigo, and around 14 to 30% higher when compared to SpiceJet. Now, this high cost structure will definitely impact Jet Airways more in these market conditions, and because of the reasons that I mentioned back, Jet Airways is also expected to report a loss in the first quarter of financial year 2019. Now, the loss is expected to be around 565 crore rupees, and this is after the company reported a loss of around 1000 crore rupees in the fourth quarter of financial year 2018. Now, if you see the balance sheet of Jet, now the balance sheet of Jet has also been weak. The net worth of the company has been in negative for the last 5 financial years, and the debt is also high on the books when compared to its peers. The debt is close to 8,400 crore rupees. Now, though the debt has come down a bit from its high in FY15, where it was around close to 12,000 crore rupees, but if this current market conditions sustain for a long time, the company will not be able to repay its debt going forward. So that's one more concern that has been hanging on the company going forward. And lastly, if you see the capacity addition, now by capacity addition I mean available seat kilometer, that is one seat flying 1 kilometer, where on an average the industry's capacity has increased by around 17 to 20%. Jet Airways capacity has increased by only 7.5 to 14%. So they have been lagging on this part also. So broadly, these are the main concerns related to the aviation sector and also related to Jet Airways.
All right, thanks so much for that, Samit. Zee Entertainment will report earnings today. While high ad spends may aid revenues, higher costs could impact margins. Saloni is joining us with what the street is expecting from that company. Saloni.
So we are expecting a very good quarter from Zee Entertainment this time around. In terms of headline numbers, we are expecting revenue to increase by 16% to 1785 crore, while net profit is seen up over 41%. Now this is of course on the back of lower tax incidents that was seen in the base quarter, while EBITDA margins are expected to be flattish around 31.7%. Now that apart, Zee Entertainment is expected to post healthy ad revenue growth, largely driven by higher viewership share, increased ad spends from the FMCG players, along with a low base which was impacted by GST. Well, in terms of subscription revenues, it is expected to grow over 10% YOY. Now, do remember there was a decline of 9% in the base quarter as Zee sold its sports business to 10 networks. On the contrary, higher content cost for their digital platform, that is ZEE5, and their investments in movies will continue to weigh on margins. And lastly, in terms of what to look out for in terms of earnings, we will be looking out for management commentary in terms of their margin guidance for this fiscal year, along with their investment plans and content pipeline for their digital platform, that is ZEE5, and also international launches if there are any.
All right, Saloni, thank you for that. Let's move on. The International Monetary Fund has warned that rising trade tensions between the United States and the rest of the world could cost the global economy $430 billion, with America especially vulnerable to an escalating tariff war. Speaking to Bloomberg's Bonnie Quinn, IMF's chief economist Maurice Obstfeld calls the trade war the greatest near-term threat to global growth. Here's a slice.
We think that U.S. growth will fall as the effects of the current fiscal stimulus begin to wane, less government spending and a reversal of tax incentives. And furthermore, the U.S. is growing way above potential at the moment, and that can't continue. So you put those things together and you get our projection of a falling growth path. Now, that will have a negative effect on global growth, other things being equal, but they're not equal because we have some other parts of the world, for example, emerging markets, where we're predicting faster growth in 2019. So that evens out and leaves us with, again, 3.9% projected growth in 2019 as in 2018.
Now, one of the biggest risks that you cite in your report is that current trade tensions escalate and there'll be a cycle of protection and retaliation. What are the odds that that happens?
It's hard to say because this is really the realm of politics and psychology and maneuvering by governments. At the moment, I think the odds look pretty good that we'll have at least some more rounds of restrictions. Hopefully in not too long, governments realize that there's more to be gained by supporting the multilateral trade system and negotiating about the sets of issues that have led them to trade conflict.
Well, you point out that the U.S. has done something to contribute to this. What's the likelihood that the U.S. reverses its position? I mean, it doesn't seem likely now, and so what position would the IMF take on that?
Well, again, we have, over the post-war period, conducted trade within a multilateral system of agreed mutual trade liberalization, which has been immensely successful in lowering tariffs on goods to pretty low levels, where they generally are now from the high immediate post-war levels, and which has supported growth. So our advice would be to improve that system, to build on that success, and extend it to other areas where there's been less liberalization. For example, services trade. The U.S. has a huge comparative advantage there. That should be something that's attractive to the U.S.
Maury, you say that financial markets seem, quote, broadly complacent to global risks. Complacency is not generally a good thing. Are we headed for some kind of financial market meltdown in some way?
Well, there could be abrupt repricing of assets if growth slows, or if, for example, the Fed increases interest rates faster than markets now expect. But what we've seen is, even in the face of the current trade tension, markets may react on the day something is announced, but they very quickly bounce back. And I'm not sure that the possible downsides are fully appreciated. I mean, markets may think that countries will all work this out and go back to normal, and I think that's not absolutely clear given the path that we have seen.
Just a few more headlines. You say there is some momentum that has gone out of European growth. You also say the US is fairly vulnerable to truly global trade conflict. And on China, you say China is also vulnerable to trade tensions. We just got GDP today as anticipated. What could be sort of the worst case scenario for China in a trade war situation?
Well, China is a very open economy, so they are very dependent on exports, and could be hurt by U.S. restrictions. That being said, their leaders do have a number of levers they can use to stabilize the economy. In terms of what we're seeing currently, today's GDP release from China was a bit below expectations. There are some weak indicators, but we ascribe that mostly to the fact that the Chinese authorities are acting, and wisely in our view, to slow down the very rapid rate of domestic credit that they've had in the past.
All right, slip into a quick break. Coming up on the other side, there is a debate brewing on local storage of payment data. We get your view with Shamika Ravi of Brookings India.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis, a case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Back on lunch, the headlines at this hour. Nifty Sensex trades higher, led by gains in oil marketing companies. The mid-cap index outperformed, shrugging off the gloom of the last 4 days.
The Telecom regulator recommends that consumers be given the right to choice, consent, and the right to be forgotten as they try and safeguard data privacy.
Oil prices hit a 3-week low after Saudi Arabia reaches out to its Asian customers to sell more oil.
All right, before we get into all of that, let's get a check on the markets. About 0.2% higher on the Sensex. Agam is here with the movers. Afternoon.
Good afternoon, Ira. Well, some respect for those who are long in the markets after the weakness that we saw yesterday. We're starting to see a little bit of an uptick when it comes to the benchmarks. The Nifty specifically, once again, edging towards 11,000 at this point in time, and Sensex also advancing by as much as 0.3%. A lot of strength coming in from the Nifty Banking Index. When you consider the turnovers, largely average when it comes to the NSE cash and the NSE, or for that matter, BSE cash turnovers. The same for the NSE F&O as well. Not too much to speak for there. Among the sectors that are standing out today, firstly, right at the top, well, you do have the OMC standing out. In fact, all IOC, BPCL as well as HPCL advancing in today's day of trade, and with some momentum too, considering we have seen that drop in crude prices, and that's followed by a little bit of recovery in the likes of Hindalco as well as Tata Steel, which are also keeping the broader markets uplifted. That said, there is substantial weakness in Hindustan Unilever, which is now starting to flirt with levels of around 1700 on the lower end after the tremendous strength that we've seen in Hindustan Unilever over the previous 3 to 4 odd weeks. That said, it's once again, when it comes to the benchmarks, there's consolidation, and for now, however, looking good considering we are inching back towards 11,000 on the Nifty.
Akam, thank you for that. Goa carbon numbers are out. Let me hand it across to my colleague Nikki Michandani for an earnings call with the management. Nikki.
Thank you for that. Well, hello and welcome, Mr. Srinivas, to Bloomberg Quint. Seem to be a good set of numbers on year-on-year basis. Sequentially, however, we are looking at a downtick in your revenues and your EBITDA. I'd like to understand the reason for the same.
If you look at the, as you rightly observed, on a year-on-year basis, we are positive. We've clocked in 124 crores. But if you look at March and if you look at June, we have a downtrend for two reasons. One is we could not complete a few rakes due to rake availability. We have enough backlog of tonnage to be supplied to our major customers, as well as we had to take a planned shutdown to our biggest plant, that is the Paradip plant, because we could just manage about 65% capacity utilization in Paradip plant because of the shutdown in the plant. Otherwise, in terms of top line, we would have been able to manage a top line almost to the extent of the last quarter.
Sure, Mr. Srinivas. Apart from the normal maintenance work, we also saw some kind of disruptions in your Paradip unit on account of labor issue. Has the plant resumed normalcy in its operations right now?
Yes, it is very much, it resumed normalcy within 48 hours. There was an issue with the contract labor force, but it was tackled immediately, and now the plant is running normal.
All right. Also, I'd like to understand a little bit about your raw material costs. See that on the upward side, some kind of input pressures coming in. Also, if you could give us some sense on green coke prices, which are the raw material to your product.
Sure, you've made a right observation. There has been some pressure building up on our raw material price, that is green price coke. And particularly in China, which is our main source, the prices have been going up. For two reasons. One is some additional capacity of calcined pet coke has opened up in China, which means more demand for green coke from their side. And the other, which is even more concerning, is this whole US-China trade war. You know, there have been duties slashed on imported US coke, which was about to the tune of 7 to 8 million tons, which was imported into China. Now that looks a little difficult. And if that does not come, then there will be further pressure on the raw material pricing of green coke. So these are the two factors, and that's how we see our raw material prices inching up. There has been almost a $10 to $12 increase in pricing of raw material, that is the RPC, that is the green coke.
All right, Mr. Srinivas, thank you so much for your time. It was indeed a pleasure talking to you as always.
All right, Nikki, thanks so much. Let's move away from earnings. People should have the right to their own data, not companies, says the Telecom Regulatory Authority of India. They came out with a 77-page report yesterday highlighting the need for better data protection laws. Arpan Chaturvedi is joining us with some of the key takeaways from that report.
The two main points that come out from this report is that one deals with the ownership of data, and the other is with the regulatory framework for protection of data. And the TRAI in its report has said that at the current, there must be a data regulatory framework to protect users' right. And as far as the other main feature of the report is concerned, there the TRAI has made it clear that what they have recommended is that the right of the personal data should always lie with the consumers. Apart from that, they have also said that there should be right of choice, consent, and of course data portability, and as well as, very importantly, right to be forgotten. Apart from that, the TRAI in its report has also said that there must be steps to encourage information related to data security breaches. Of course, we have also, if you remember, as far as the Aadhaar case was concerned, there also this question was again raised, that the TRAI has again said that must be encouraged and incentivized so that such instances do not occur in future. So these were some of the main highlights that has come out from this recommendation that the TRAI has come up with.
Arpan, thank you for that. The Finance Ministry, meanwhile, is said to have asked the Reserve Bank of India to relax its directive asking all digital payment companies to maintain their database in India. That's according to a Reuters report. The government has sided with the digital players and asked the regulator to allow them to keep their databases outside the country as long as a copy is maintained in India. Joining us now to talk about this in greater detail, it's been a matter of discussion for a while. Shamika Ravi, Director of Research at Brookings India, now joins us. Shamika, thank you so much for joining us on Bloomberg Quint. What have you made of this debate so far? The push by RBI for localization and the Finance Ministry's proposal to relax it. What are the pulls and pressures?
Well, I think the push for data localization is a highly, it's a global phenomenon. And you have to understand that, there are obvious reasons why countries are asking for data localization. One has to do with the supervisory role and the regulatory oversight, which is what RBI's, requirement when they put out the document a few months back of all the payment banks. That was mostly from a supervisory or a regulatory viewpoint, where they mandated that all the payment banks keep their data within India. But there is a second aspect to localization of data, and that has to do with assurance of privacy protection. The Finance Ministry's document, which came out a few days back, and I haven't read the document. All I have had access to is the media, discussions on it. But it seems to basically simplify that by basically saying that, look, maintain a mirror. So continue your usual business as usual, but maintain a copy or a mirror of that data locally. Now, the mirroring or maintaining a copy locally, while it solves the supervisory and the regulatory concerns which the RBI had raised, so in that sense it is consistent with that concern, but it still doesn't answer the assurance of privacy concerns, which I think is increasingly becoming a prominent one within India.
Shamika, that distinction, I just want to take it a little bit forward. So the RBI's role in this is supervisory to the extent of payment data. And as you said, in their circular, they said very clearly that their intention in asking payment providers to do this is supervisory in nature. So just on that front, would it suffice to have a copy of the data here? Because, the payment providers, and I'm not arguing on their behalf, but putting forward their point of view since we don't have a representative here, is saying that it's a very long, drawn-out, costly process to actually transfer all the data from another location to India.
Well, it is, but that is what countries and economies have to do if you are going to keep a regulatory oversight or have a supervisory role. So I think that kind of a fixed cost or those basic investments has to be made by industry. I don't think there is any two-way about it. And we have seen this kind of a move now globally happen in all the major economies. So from a long-term perspective of healthy regulation and supervisory role for a central bank, I think it's an important note that the RBI put out.
Absolutely, Shamika. My point simply was that would the RBI's objective get fulfilled if there is a copy of the data in India, rather than insisting that it is only stored locally? Some of the issues that you raised privacy-wise are very, very important, but I'm wondering whether that's in the mandate of the central bank or should that come down to the government then?
Well, I think data. We are still discussing the data, the Privacy Act, right? Which will basically mean who has access to data, and whether we should really be thinking of completely new set of bodies like data fiduciaries, which then determine. I mean, based on what TRI has just put out, that while individuals might have access and ownership of data, but whom I choose to share it for how long, that requires a certain architecture, and those kind of fiduciary bodies based on consent are being worked out now. But definitely, this goes beyond payment banks era. This whole data localization issue, I think if a mirror is maintained in India for the problem of regulation, at least the supervisory nature which RBI has vis-a-vis the payment bank, I think that should largely be met. But it doesn't just, this whole idea of data localization and maintaining creation of local servers, it doesn't just, it is not just a debate which is limited to payment banks alone. You have to view this vis-a-vis almost all large data companies, because while we understand trade in goods and services and we know what the terms of trade there are, when it comes to data sharing internationally, we don't know what we're not very clear, and we have to think very deeply, because these relationships are highly asymmetric. There's a lot of data flowing from India on Indians to outside, and we're not sure what the counterbalance right now is. And to that effect, what complicates this relationship even further is the role of national security agencies and large data companies. What is, their rules and guidelines, and their relationship with national security agencies internationally vis-a-vis national security agencies within India. So you have to, these are new set of problems, and I think India has to now seriously think about what data localization is going to achieve, and in the long term think of the role of all these different bodies for regulating data flows. I think it's about time we invested in that kind of policy making.
You alluded to the TRAI regulations or TRAI proposals. There is also the Justice Sri Krishna committee that's looking at the overall data privacy clauses and what can come into the ambit of data privacy as a whole. I have a slightly simpler question. Is data being local mean data being safe?
Well, it is an assurance. I mean, Indian citizens, do you have legal recourse to some international agency or international firm surveillance or snooping on you? You don't. So while citizens of the US have a certain legal recourse against their agencies, and citizens of Sweden and Russia, Germany, China, what recourse do Indian citizens have to surveillance by international agencies or data firms? I mean, we have seen the kind of breach that happened with Cambridge Analytica. So you are right that we need to invest a great deal more, even in terms of, look, the RBI is asking for data localization of the payment banks, and they want unfettered access, and they have a right to do so, and I'm glad they finally asserted that kind of requirement. But whether it becomes safe or is it sufficient is a different question. After all, RBI has had unfettered access to bank data for a long time now, and we're still debating whether we've done enough as far as raising red flags,
Ouch, Shamika, on behalf of the RBI, ouch. But just as a last question, I do want to ask that, it's a broader debate. You've made that point very well. But in asking the RBI to sort of, ease up on its norms or even push them back, do you think we're sending a wrong message that, there are two government agencies, two regulatory agencies at cross purposes? Should one just sit down and come up with a broader policy on this?
Absolutely. I think, data is going to determine economic power for countries and economies in the long term. We cannot afford to be ambivalent on this. And I think while the finance ministry and RBI are at often, and for healthy reasons, they have different objectives and roles within the economy. But I think when it comes to data protection and data sharing guidelines and rules, I think it is very important that as a country as a whole and an economy, we need to come up with a set of guidelines and rules as one.
All right, Shamika, we'll leave it there. Many thanks indeed for joining us with your perspective. Shamika Ravi from Brookings talking about data privacy and what this means for India.
All right, let's move into international news. The Pakistani military is tightening its grip over the media as elections draw near. The armed forces have been clamping down on free press and other advocacy groups as voters get ready to decide the fate of the nation. Ian Marlowe of Bloomberg News joins us now with more. Ian, a slightly grim situation emerging there.
Yeah, there's all sorts of dynamics happening in Pakistan right now. They're heading into the polls next week, and for weeks now, really, we've seen Pakistan's military start to crack down on civil society. The most prominent part of that has been on the media. There's been a lot of attacks, attempted abductions that have been blamed on the military. The most prominent one of those has been Taha Siddiqui, who spoke to Bloomberg's Chris Kay in Paris, actually, where he's living in exile now. But there was an attempted abduction on him where people tried to pull him out of his car. He actually managed to escape and then fled with his family. There was another British Pakistani activist, Gul Bukhari, who was actually abducted, and it was only after complaints from the British government that she was eventually returned home a few hours later. So it's getting very grim in Pakistan right now for media outlets, organizations. There's been blackouts of TV stations. Dawn, which is one of the critical newspapers there, has seen its circulation plummet amid allegations that the military is actually hassling sort of vendors and newspaper vendors into not selling it and removing it from the cantonments where they usually sell the paper. So there's a lot of dynamics happening ahead of the polls right now, but it looks pretty grim for media right now.
Ian Marlowe, many thanks indeed for joining us, reporting from Delhi about elections in Pakistan. Elections are scheduled next week. Donald Trump's refusal to condemn Russia's meddling in the U.S. elections has caused a lot of backlash this time from the Republicans itself. Standing next to Vladimir Putin at a news conference in Helsinki, President Trump offered a surprising comment. He said he's not sure and he believes the allegations. And this comes 3 days after Special Counsel Robert Mueller indicted 12 Russian intelligence agents for sabotaging Hillary Clinton's campaign. Bloomberg's Joe Sopics reports.
Republicans have sort of looked the other way with Trump on a number of issues in the past, fearing mainly because he's got such a hold over GOP voters in the United States. But this triggered quite an intense backlash, probably more than anything he has done in office. You had some of the people who've been frequently critical, such as Senator John McCain, Senator Jeff Flake, but even one of Trump's staunchest supporters, Newt Gingrich, the former House Speaker, whose wife is Trump's ambassador to the Vatican, said this was the most serious mistake of his presidency. It needs to be corrected immediately. There have been a few who've stuck by him and suggested, well, the relations with Russia are worth it. But pretty much universally, even some of the Republicans who've been fearful of crossing Trump have at least been sending out statements contradicting him. This has roiled things quite a bit here in the U.S. Congress doesn't have a lot of ability to influence U.S. foreign policy directly. They could pass some resolutions supporting the U.S. Intelligence Committee, but there are a number of other things they could do on the side, make it more difficult with some of his policies that will need to get congressional approval. There has also been some movement in the U.S. House by Republicans there to do things that kind of undercut the probe into Russian influence on the campaign and possible ties to Trump's campaign. Those may slow down. I mean, we're still waiting to see whether or not they go through with some of the other things, but there's not a lot directly they can do, but there can be more defiance of Trump in other areas where he wants to advance his agenda.
On that note, it's out of time on the show. Thank you so much for watching us today.
Countdown is up next.